Hi everyone, this is Ashish Kyal here. Welcome to Ashish Kyal Trading Gurukul. I would say because this is the learning series and I'm naming it as Ashish Kyal Trading Gurukul by Wave Strategy Advisors, and this is an Elliott Wave channel. So don't get confused. And I'm going to be talking about Nifty. Where is it going to stop? That's the question many of you are actually having in mind, is where is Nifty going to stop? Is it going to stop here? Is it going to continue the downtrend? What are the key levels to look at it? What should be the trading strategy going forward? But I have not seen people talking about it done exceptionally well the way it is expected, despite of me calling for a top and calling for a top exactly on the 14th of Feb. I declared my love for Nifty and I said it's going to go down to some extent, pull back to some extent, and then it's going to go down. It behaved to the point as per what I said over there. Then again on the next week webinar, I talked about Nifty. I said do not buy this market, it's going to go down. It went down. Even now, it has continued to fall very sharply, but I am sure many of you are actually looking to buy Nifty in this crash. So do not try to burn your hands. In case you are stuck, you are probably not using a stop loss. And there are many reasons for it. It's not your fault. Its markets are that fast. If you would have created a long position in yesterday's session when Nifty closed, you might have been directly seeing it from 11,600 opening below 11,400, and by the time you realize it was 11,300. So even if you created a long positions yesterday, looking at something on the candlestick, maybe an inverted hammer or a hammer, what you call, and then you saw it coming down all the way in today's session, that was absolutely panic, and that resulted into people being stuck. So many of you might have saved yourself from getting stuck until yesterday evening, is what I'm assuming. I don't know. So we have been looking at the markets. I've been calling for a top from 12,150 odd levels all the way down. It's not about boosting myself. It was based on time cycles which I used. It was based on the neo wave method which I used, which helped me to predict something like that well in advance. And people are blaming all the way to the coronavirus, which has been all over the place, and that's resulting into a global financial market collapse. I do not see it a financial market collapse. Such systematic sell-off globally happened only in 2008, and this time coincidentally it is triggered, or it's coincident with an epidemic outbreak. So the epidemic outbreak which has happened is not for the first very time. It has happened in the past, it has happened earlier, and we have seen in the market it does not behave this way. What we are witnessing right now are two different aspects. One is something which is an epidemic, which is an independent event, and something else which is a stock market collapse, which was anyways a huge valuations were created. The markets were very overvalued. Nifty PE ratio, if you plot and check that PE ratio, I've been showing that in my monthly and the daily research reports. I'll be mentioning about it was way too expensive, and in that expensive market you cannot expect anything else but a collapse to happen, which we are seeing right now. So it's coincidence that the down move which happened on the Nifty is again along with the collapse, is along with the collapse in the global market, and it's also along with the outbreak of the coronavirus. So do not blame something created by humans as a financial market and taken to the higher side because of greed is now being blamed upon something else. So what we are actually witnessing is the manifestation of the collective thought process and psychology. It's nothing else. Whatever balance was lost is getting back into the balance. So what is Fibonacci actually does is it creates balance. So if something goes way too away from the mean or the average, there is a balance which is created by a counter trend move, and this is the counter trend move we are witnessing right now. So I'm going to share across a few things before I proceed further. I'm going to be showcasing, let me just share across. Okay, over here, let me share my screen. here. So this is from the monthly research which was published on 11th of February, way before the crash started. So in this period itself, if you look at the markets, we had, I mentioned about the diametric pattern, and GU is supposed to be the final leg on the upside, which was clearly mentioned when Nifty was around 12,150 odd levels. So that was the level I mentioned at that point of time. And look at what I mentioned in a nutshell. We continue to see series of negative divergences across the time frames, indicating momentum is slowing down right from monthly, weekly, daily time frames, but price have continued to ignore and move higher, which is keeping short-term trend positive as long as the support near 11,900 to 850 remains protected. A sharp fall below that is going to be an indication a bigger degree downtrend is starting on the market, and that is the reason we cannot see if the momentum continues. So all of those things are mentioned. Any downside reversal, whenever it happens, will be violent given the series of negative divergence. Now, if you read this line, you know what I mean. So that's a very clear warning that I mentioned in the research. Any downside reversal, it's going to be violent given the negative divergence across the time frame. And people have been blaming all the news, events, what's happening around for the fall in the markets. I do not see anything is related. It's just coincidence, an epidemic, and the global market crash happened together. So it's a painful situation on the both sides. But if you are, at least from the market, if you are on the right side of the trend, you would have been probably, this was the killer move that you could have made on the downside. It cannot be better than that. Not a single day Nifty closed above the prior day's high. Now that is what I use in order to understand the market trend is reversing or not. One simple method, if you want to take away from what I'm discussing right now, is look at Nifty daily chart, look at the prior day's high. Unless and until you see a close above the prior day's high, markets are not confirming it's going to reverse. The next thing that you are probably looking at is nothing but looking at the oversold reading of RSI and other indicators. Try to understand. I have seen 2008 collapse, and in that period, indicators remained in the oversold state for many hours or weeks or days. It is not the correct way of looking at the market during a systematic sell-off, because what happens is it goes down sharply, then for half of the day it consolidates, and then the RSI is relieved, and again it starts going down. That's what is happening even now. And you can clearly see a rotational participation. Not all stocks collapse the way in a single day, but certain stocks start going down, the other stocks halt, and then the other remaining stocks start going down. Look at SBI. SBI was not participating. Look at the collapse in today's session. Look at Yes Bank, it was not participating. Look at the collapse. Look at DLF, which was extremely weak, showed some pullback in the final hour. So that's how the systematic selling pressure is right now still ongoing in the market. I don't want to scare you away and say it's going to go down further from here or not. We are going to look at the charts, and I'm going to showcase what I look out of and how it's going to behave. So I'll take questions later in some time. Let me first share across my chart. It's a short webinar which I'm going to do. And in case you have not looked at my previous webinar on what is Elliott and why is it necessary for super trading, you can refer it, which I published on my YouTube channel, Kyal Ashish. You can also follow me on my Telegram, which is Elliott Wave Strategy. I'm going to discuss a lot of things there. And okay, so let me now share across my chart and Nifty, and let me show how I'm looking at the overall market. So right now, when we discussed last time, Nifty was around this zone just a week back in the webinar, and we are here right now. That's like a huge down move on the market. So if I have to look at it, the first thing that you have to do is look at the daily chart. If you want to understand where are we going to stop, let us try and look at the daily chart and see what are the crucial levels that we are seeing right now. One of the important level I'm going to look at it is this channel. This is the trend line, so there is some room on the downside based on this specific trend line. The next thing I'm going to look at it is in terms of connecting the prior lows. So there are multiple things that I have going to look. I'll take questions later. So if you connect these lows, And let me just connect it prudently. Okay, we have actually managed to close and cross back below this low. Now, what is important is if on a Monday, if we manage to cross back above this low, it's going to be a very important indication that we might form a low at the current today's low. But there is no such indication as of now. What we can only look at are the prior lows. Where are it? So this is the price action reversal areas that we are seeing on the chart. So this is an important level to watch. This is an important level to watch on the chart. So this becomes my extreme strong support zone. So this zone is the level that you have to look at. Are you with me? So I think 11,100 to 11,150 is a very important zone which market should not break. But do not try to capture a reversal. I am not a reversal guy. I probably go with the trend all the way on the downside, short at the high, and keep riding the trend until the system confirms there is a reversal. And the best way that you can look at the market. So keep it simple and look at it in this way. Next, if I am to look at a certain time series data, I will not be able to disclose the exact cycles and time series that I look at, which is there in my daily research. You can refer that. I'll be discussing that in my mentorship batch. A lot of you are from that batch, and I'm sure you are excited to learn about that. Tomorrow, in tomorrow's session, I'll be discussing about the time cycles and a very in-depth on how to trade it. So I'm going to be looking at these lows as one important thing. The next is there was an important reversal date on over here. The next important reversal date was this low, and the next important cycle low is forming now as of today. It is in these 2 days of time there is a cycle low which is there, or a reversal date which is there, but that's time can be very tricky. As I said, time can, you have to give 10% leeway to time. So in that I have to give 3 to 4 days of leeway, and 4 days of leeway is sufficient, as you know, for market to go from where to where. I would suggest, in case you are on a holiday about a day back and you just look at the market, you are in for an attack if you are on the long side. Or if you might be celebrating if you are on the right side of the trend, which is definitely negative. If you are looking from the wave perspective, I clearly explained that. I showed it on the chart prior. This was wave F. We completed G at the top, and we have started a bigger cycle on the downside for sure. We might see a pause, a temporary pause, which might result into an up move. Till what level? I will be explaining that in my daily research. You can refer that. Or in the mentorship batch, I'm going to discuss till what level the pullbacks can be expected. Post that pullback, I am not seeing markets to sustain. It's going to be only an opportunity to short again. So do not be, I see we are made a top from medium term perspective. It's not going to be taken out for a few weeks or few months. I think 12,300 is here to stay. We will not even dare to target that level. When I say that, it means that we are not going to reverse back to 12,200, 300. What we will see is a retracement in the form of wave B. When it starts, how it starts, and how much time it will take, that I can predict once I see a reversal confirmation, which is not there as of now. For now, if you are short on the market, looking at the various research that I have published, you continue to hold on to the short positions. Keep a classic trailing stop loss method. I mentioned that in my daily research, which stop has to be used, and use that stop loss method very prudently. So far, Nifty has not taken out that trailing stop method, which I have been talking about in my daily research. So keep following that. That's the best way you can trade in the market. And I'm also giving in the Nifty trading strategy in the morning, I mentioned about that trade setup. So it's working very, very well. From front of options, things have become very tricky in on the option front, because what has happened is during this collapse which has happened on the market, let me go on an hourly chart. During this collapse which has happened in the market, the option values have actually deteriorated and gained importance as well at the same time. So this is important. So what has happened is the option value has been very tricky. If you look at 11,200 call option of a March end, you will see that it did not collapse with the collapse in the market in the first place, but later on when again the selling started, it started collapsing. So if you are a trader in options, you need to be very careful. It just whipsaws, the premium increases, the discount increases, and it just not do anything. So from here on, you need to be very careful whether you are a futures trader or an option trader. I'm not scaring you away, but you need to have a very clear trade plan in place. What? So how Nifty is going to behave in the coming week? I'm going to talk about that, but use it from a learning perspective. Do not take trades on what I'm showing here. It's a free webinar for exact level and exact entry exit. Refer the research or subscribe to the advisory services. Over here, we closed at 201. As of now, there is nothing on the market which suggests we will bounce back. So I'm not sure how Monday is going to open. But I'm very sure if I short at current level, there is no risk reward in the market. So there is no risk reward for the short positions. And I can clearly see an RSI which is trading at 18. It's not a favorable risk reward right now, but I will not give too much importance to RSI. Try to understand. What happened in 2008 was a systematic sell-off and a square off done by the margin brokers who are probably trying to bust the positions of the clients who are not able to pay their margins. And this is what is happening now. The sell-off is not because of anything else but the margin pressures that each one of the leverage position is facing. And now they are squaring off the positions. How much they square off depends on their capability to hold on. The day they started, they continue to square off. If Nifty breaks away another level, 100 or 150 points, the square off can intensify. So no indicators are going to be suggesting that markets can't collapse, it can't do that. What is important is to wait for prices to show some recovery back towards 11,300, 11,350. Once it goes to that level, start shorting, keeping a very small stop loss. That is the best way I think you can trade the market in the current scenario. And the day we see a very strong move back above the upper trend line of the channel, which I've drawn here, that will indicate yes, a short-term low is in place. We will consolidate for some time, not reverse, consolidate. And this consolidation is going to happen over the period of time. This consolidation is going to take place over the period of time, and it's a big range that you are going to see. You are going to see some 300 points up move, 200 points down move, again 200, 300 points up move. That's how it's going to move. Now up to you how you want to capitalize on that by simple Elliott wave methods which I use. I use Elliott wave methods, combine it with cycles in order to identify those key reversal areas and the wave pattern that we look at. Okay, so there are a few questions. Let me take those few questions. But before that, I want to share across one very important announcement. Also, my screen. You saw the monthly chart. Okay, so this is the BMW module which is happening on 21st, 22nd March, and Master of Wave, which is Elliott Wave, Neo Wave, time cycles in April. There is a mentorship, say next batch which I am launching in June 2020. So if you have anything to register, if you register for the mentorship batch, you will probably be, if you click here, you will get all the details and everything from here on. So if you register for this mentorship batch, you will be able to attend the trainings that I am conducting on MOT and MOW. If you go to Trading Gurukul, you will see about the upcoming trainings. And over here, let over here I'm going to cover everything that you should know from short-term trading perspective to the long-term investment. So I'm going to cover anything and everything over there. So you are going to be looking at a lot of things in terms of right from indicators. Why 200 is average no longer work. Many people use 200 is 50 average for taking trades. I don't think it's working anymore. You don't do that. I'm going to
Hello.
find a lot of those things. So
बोलिए sir.
do not work on those aspects. It does not work. So I'm going to be talking on lot
जी
on Master of Technical Analysis in that, and I will ensure you
जी
become a
बोलिए
master of Wave because I am been using Elliott Wave, Neo Wave for many
जी.
months or for many years, and it has worked extremely well. You can see my forecast and it has worked.
आगे एक 5 रखता है ठीक है,
So
जिससे सेक्शन नजदीक आ जाता है जीबी के।
I think
आप व्हाट्सएप करिए, मैं एक वीडियो है वो भेज देता हूँ आपको।
so. Just give me 1 second. I think
जी
someone is
जी
unmuted.
भेजिए, मैं आपको एक वीडियो है, फोटो भी है।
Okay. So I'll take the questions now. I hope I am being clear what you have to do. I think Monday is very important. If we break that 11,100 to 150 is the zone, it should remain protected. If 11,100 taken out, then the another set of margin call will be raised and that can create a havoc. So for someone who wants to trade the market, do not probably go long right now. Wait for Monday, see the pullback. You will be getting a shorting opportunity, I would say, over short term, not a buying opportunity. Do not buy a collapse. You don't catch a falling knife. Don't do that now. It's not the time. I will hint in the daily research when it's time to short, to go long on the market, but it's not now. Uh, Okay, yes, I've disconnected the mic. There was some disturbance. Any online courses? Yes, the mentorship is an online course which is 3 months spread across over the period of time. So you can look forward for mentorship. You can probably drop in your details, and my colleague will call and explain it to you how it works. In that, you will be able to attend a lot of things which is there. So it's an online course. MOTA and MOW is a classroom course happening in Mumbai. I would highly recommend if you want to learn Elliott wave, you do that. Whether you are the basic just starting trading or you are an expert already, you need to probably it's for everyone. You are mentioning about SBI DLF. Can you repeat it? Okay, for SBI DLF, what I said is SBI was the stock which did not fall in past 3 days. It started showing a very sharp fall today. And DLF was a stock which has been falling all the while. It showed some resilience and pullback today. So what is happening is the markets is selling off in a rotational way. Something which was selling earlier is now pausing to relieve its oversold state, and the fresh and the new stock is selling. Now maybe SBI might pause now, and something else will sell off on Monday. So that's a systematic selling that I'm seeing right now as of in the market. How do you know the lows are formed? When you start seeing these high beta stocks which were leading the fall, you can look at Tata Motors, DLF, LIC Housing. These are the stocks which has been leading all the way on the downside. When this stock starts going up, that is the time you understand, okay, now there is a possibility of some short-term low might form in the market. That's how I look at it. Okay, there is another question happens first, and the indicators like RSI, etc. are calculators. Why to talk up for RSI? Absolutely, that's bang on. You need not talk about RSI at all, but try to understand one thing. Market moves in a specific, standard, systematic way. It's not random. And in that systematic way, history tells us that some indicator, when it is at around 16, 17, 18 levels, it has a tendency to reverse back on the upside or go sideways. So RSI will tell there is a tendency to probably reverse, but it does not say it wants to reverse. It is like a classic example of a car. If you are driving a car at 100 kilometers per hour, you are now driving it at 60 kilometers per hour, and you go to 40. Does it mean that you want to reverse? No, you just want to enjoy the nature, and you are looking at outside your vehicle at 40 kilometers per hour. It does not matter that it has to reverse, right? Same thing with RSI. It does not indicate it has to reverse. It only hits the risk reward is not favorable if you want to short now. That's how I look at it. So Nifty spot, yes, I look at spot charts. I believe in looking at spot charts, not futures charts, because spot charts are important. In futures, there is a lot of premium discount happening. Spot is the chart you have to look at. And okay, his wave 5 is getting extended. The fall, I think, is not the fifth wave. I'm looking at this entire fall as a triple corrective. We are in the third correction, or maybe we are in the third wave. So as per neo wave logics, I am seeing it either the third wave, because this is the biggest candle so far, or we are forming, this is the first leg of a triangle, and we will have A complete and the B going up. So that I'm going to be explaining in my daily research. You please get access to it for the internal counts of Nifty. What I'm going to explain that in much detail over there. Any other questions, please? Okay, then fantastic. And I can see a few of you are from the mentorship batch tomorrow. I'm going to be much more detailed. I can see Mahesh, Navin, Nikhil. I think a lot of you, Prashant, Rakesh, a lot of you are from that batch. So I'm sure you're excited to have my views tomorrow in much detail in the 3 hour session. I will tell you exactly when we will reverse and how we will reverse and how we will flow in tomorrow's session. So stay alert and ensure you do not miss my mentorship session tomorrow because it's going to be very interesting. Okay, thanks everyone. And for any doubts or queries, you can write to us at helpdesk@wavestrategy.com to register for the training which is happening in March 18, 19, and April 2021. You can probably just call us on 9920422202. There's an early bird which we are extending right now because a lot of people have been busy with the market, so I'm extending it to the for 1 more week. You can get and avail that early bird offer for this upcoming training. Anyone wants to register for the mentorship batch, you can call on the number I just now said, and my team will be more than happy to explain you how to go about it. The reversal day, I can't really declare the reversal day because I will be disclosing it in my daily research and it's paid by the client. So I can't really do that. I can't really give everything in the free session. Use it for educational purpose only, please. Okay, by shorting early, yes, you could have. I mean, that was a writing on the wall around 12,150. If you wouldn't have shorted, maybe you shorted at 11,850. That was a clear indication. Look at my monthly research. In that, it was mentioned 11,800 to 850 breaks. Expect a collapse in a straight down. And in that monthly, it was clearly mentioned. What else you require? That is published once a month. If you just read that one report once a month, you know what to do for the entire month. It's as simple as that. And that next report is going to be published after 3 days again. So get access to that if you want to know how to go about it. Great, fair enough. Okay, let me stop the recording now.